Welcome to Bullion Bulletin. This is 13th edition of India International Gold Conference with me, Mr. Professor Arvind Sahay. He is head India Gold Policy Center. Welcome to Bullion Bulletin.
Thank you, Devajit.
As I saw your presentation today, you spoke about basically the habit behind buying gold in India and why Indians do not want to part with their gold, and there is a lot to be needed to motivate these people to deposit their gold in gold monetization scheme. Am I right?
Yeah, absolutely, Devajit. So, when we start a scheme like the gold monetization scheme, there are two sides to that scheme. One side is that you set up the infrastructure, which is that the refineries, the banks, the CPTCs have to have a system in place where people can go and deposit their gold, be assured of the quality that they are depositing, and be sure that that gold doesn't get stolen or nothing bad happens to it. So there the banks need to put together a system. The banks need to be comfortable that they can put it on their books. It is within the RBI regulation that there's some profit in it for them. The refineries need to be comfortable with that. So that's one part of the equation. The other part of the equation is that people need to be comfortable with giving out their gold, because in our country people are very emotionally attached to gold for a variety of reasons. Maybe it's a social security hedge, maybe it is a hedge against inflation, maybe it's a saving because we do not have organized system of savings in the rural areas. So in a very real sense, for a lot of people in our country, what has happened is that gold is very much a part of their DNA. It's a very deep-seated habit. And habits are very emotional in nature. You cannot reason with these habits. You cannot tell them that this is a good reason for you to change, and therefore because intellectually it is a good reason, people will change. People don't behave like that, where there is a deep-seated emotion attached to some behavior, in this case it is the attachment to gold. So how does one overcome this resistance to change? How does one change the behavior of people so they are more willing to take out the gold which is lying in the mattresses or lying in the lockers and deposit it with the banks so that it gets monetized, right? Because if we are talking about 300 to 500 tons of gold getting out of the system, so that much money which is less available to the economy. Okay, some part of it does come out as gold loans, but that's on a very small proportion. A Mannapuram or a Muthoot together have around 300 tons, but every year 500 tons of gold goes off as jewelry, right? So across 20 years, that's an enormous amount of gold that's just lying there, and that money is not being utilized for economic purposes. So we do need to move in that direction. So how do we move in that direction? One part is obviously putting in place the system, the CPTCs, the jewelers, the refineries and so on. You have good keratometers or X-ray machines, bank regulations. But the other part is how do I persuade the people, right? So how do I persuade the people where their emotions are involved? So now, from studies in neuroscience, studies of the brain, we are reaching to a point where we are beginning to understand what drives the emotions of people, which parts of their brains are becoming hyperactive, overactive when we talk about those things to which they are deeply and emotionally attached. And when this knowledge is there, we can bring that knowledge to bear, bring that knowledge to some use, right, which allows us to design interventions. And in the talk that I had just now at this India International Gold Convention just a little while ago, I talked about the Wadala crossing, right, where essentially what the intention was that people who were crossing the railway crossing at the Wadala crossing in Bombay and the suburban railways, they are a little more careful when they cross so that the chances of fatalities decrease. And what was found was that the fatalities were very large because people were no longer afraid. It had become a daily habit. It's a daily habit. You no longer pay as much attention. You're not careful. You should be afraid when you're crossing a railway track and there is a train coming at you, but they had lost that fear. So one element of the intervention was how do I raise that fear unconsciously without them being aware of it. And it so turns out that the brain is hardwired. Even a one-day-old baby, when it sees a fearful face in front, it gets afraid. Yes, and that is true for an adult human being also. So you put in place a series of fearful faces, faces which are showing an increased level of fear as you are approaching the crossing to the tracks, and automatically the unconscious fear of the person gets elevated. And so once the unconscious fear gets elevated at a high level of fear, you tend to be more careful automatically. If you are more careful, you are less likely to get hit. And the other part, of course, we know that the human brain is designed to be able to judge the speed of small objects carefully. So that's how we play cricket or football or badminton or whatever. But you cannot judge the speed of a large object accurately. So if you're seeing a large train, you will misjudge the speed. So with the second part of the intervention, the first part was putting in those fearful faces. The second part of the intervention was you go out on either side of the crossing and put in place large yellow painting markers at intervals of 20 meters. So when the person is now crossing, his fear is already elevated because he's seen those fearful faces. He's not conscious of it, but the fear is elevated. And he looks this side and he sees the train, and he sees the train crossing two of those markers. And he suddenly realizes that it's actually moving more quickly, because now he sees those markers and the train is moving from there to there very quickly, quicker than he had estimated. Earlier there were no markers, so he was not able to judge. Now he is able to judge. So a combination of more accurate judgment and an elevated reduces the fatalities, in this case from 40 a year to 5 a year. So basically the contention that I have is that it is possible for us to design similar intervention schemes for people who are holding gold that automatically induces them to more seriously consider parting with their gold, putting it in a deposit scheme. Of course, the incentives also have to be right, the incentives have to be high enough. But gold is such an emotional thing that even if I give him 5% interest or 7% interest, it is still possible that the person may not part with it, right? So how do I overcome that emotional barrier, that emotional resistance to parting with that gold? And this is where the proper interventions come into place. But to do this, first we need to generate some research-based insights, which is what the India Gold Policy Center is working on right now. We are planning to roll out a survey, a nationwide survey, where we will have a sample size of between 1100 and 1200 respondents who have bought gold in the recent past, and we will analyze their behaviors, and then based on that we will have some preliminary insights. And hopefully based on those preliminary insights, we are able to then suggest to the government or maybe to some other bodies that if you do A, B, C, D, the chances of an increased amount of gold coming into the system for the monetization scheme will become more. And that is important, because if you look at the gold holding in the country, whether it is 25,000 tons, 20,000 tons, 40,000 tons, the temple trusts and the investment gold is actually a very small proportion, only 20 or 30%. 70 to 80% is held by individuals. It's private gold and it's just lying there. Some of it does come back into the system, but very small proportion. We want a much larger proportion to come into the system. So therefore, such a campaign is almost a necessity, right? You cannot, that system as a whole does not work if only the banks, refiners and the jewelers are ready to receive the gold. The people also have to be ready to put in the gold, right? So this is where a campaign like this would be useful, and that was essentially the crux of the message that I had.
If for a poor man I have 100 gram of gold, so in today's rate 3 lakh rupees. So if I give this 100 gram gold, if I deposit this gold into that scheme, okay, I will get some percentage, some interest after the 10 years. But what I lose actually, my security.
Exactly right.
That is the fear.
Exactly,
I feel
exactly
that
right.
for the people we have in this country, for the poor class.
Exactly right. So therefore, one of the key elements of any intervention would have to be to make sure that when the person deposits that gold, that feeling of security does not go away. Yes. So first we want to confirm this. You are saying that as one person, right? Maybe there will be
hundreds of thousands of people.
1,000 people who say this, then I will say yes, this is actually not restricted to one person, Devajit, a middle class person or an upper middle class person, but it is also true for a lower middle class person, a poor person, and maybe even for a rich person. So then we have a much larger set of people for whom it is there, and we now have data on the basis of which to say that this is indeed the case. So then that gives us the next stage of the process. Okay, so this is one element which needs to be addressed. That when the person parts with the gold, his feeling of security goes. So how do I address that particular feeling of security that still needs to be there when he is parting with the gold? So now this could be one element, security. There may be other elements. It might be that the gold is not only about security, but it is also about saving for a house or saving for the children, or it is a hedge against crop failure for a rural farmer. So the message also would need to be tailored for different sets of people. The message, the intervention that goes out for a farmer is likely to be different from the intervention which goes out to a lower middle class person would be different from the message which goes out to an upper middle class person, because for each one of them what gold means emotionally would be somewhat different. And the purpose of the research essentially is to try and establish what that is for each of these segments of people, so that if and when we design an intervention, whoever does it is able to have a more targeted intervention which is more likely to result in an increase in the deposits.
Certainly.
All that we can do is we increase the probability of deposit. Human behavior is always, there is an element of uncertainty always. But if we have the right intervention, we increase the probability that we will get the behavior that we are looking for.
India Gold Policy Center is working on, suggested to the government that we should have gold exchange.
Yes.
So how it will help the industry?
This was in fact our very first white paper that we produced, the India Gold Policy Center, as a research white paper from the Indian Institute of Management that we produced. And the crux of the finding over there is that an exchange is going to be good for the industry because it will help to make gold, it will provide another outlet and increase the liquidity for gold, especially amongst those people who are investors in gold, not necessarily amongst the large retail class, but who are investors, and it will improve the price discovery process. Right now, what is happening is that we do not have a process within the country for the price discovery process. Now, one of the ironies of life is that we are the largest consumer of gold in the world, but we are price takers. The price of gold in India is set by London or Singapore or Shanghai. Why should that be the case? If we are the largest consumer of gold in the world, then we should be having a mechanism for deciding the price also. So the exchange becomes an avenue, a process, a system, an infrastructure which helps us to come to a reasonably accurate decision on what the price of gold should be. So far as India is concerned, it also increases the liquidity of that process. People don't have to take out their gold to other places to discover the price and so on. So those are some of the reasons that a gold exchange in India might be worth pursuing. Of course, some of the details would need to be ironed out, under what regulatory framework it falls, who will take responsibility for it. And in some of that, the government needs to step up and figure out what should be the mix between RBI and SEBI and Ministry of Finance or DFS, Department of Financial Services or Department of Economic Affairs and so on. Because the success or failure of any scheme, whether it is the gold exchange or monetization or bond, rests on a tripod of three things. One is the regulatory framework, the second is the industry, and the third is the consumer. Right? So in both of these cases, the policy making from the government needs to be a little more granular in nature. Even if the direction is right, if the policy does not allow for a reasonably large number of contingent factors which can be taken care of by the policy ex ante, then what is going to happen is that the policy will start to falter. And once it starts faltering, then it loses momentum. And once it loses momentum, then ultimately it is destined for failure. And what do we mean by failure? For the gold monetization scheme, for example, one would expect that you at least get 1,000 to 2,000 tons. 400 tons doesn't hack it. And therefore, if we can provide these research-based insights to policymakers, to industry, the policy that comes out is a little more nuanced, it's a little more fine-grained, it is a little more able to anticipate the contingencies that are likely to arise and has taken on board the viewpoints of many different stakeholders. So if the policy is good, the industry stakeholders are also more likely to be enthusiastic about the whole thing. And if the policy is good, and you have made the right interventions for the consumer, the customer, they are also likely to either participate in the gold exchange or give out their gold for gold monetary scheme. So if all of those three things on the tripod work well, then the policy works. Otherwise, there's likely to be a mismatch, and if there is a mismatch, then it won't work.
Excellent, sir. How are you enjoying the conference?
Oh, it's a wonderful conference. I think the beauty about a conference like this is, it helps to get a sense, a pulse of how the industry is feeling about gold. It's been a very good learning experience for me. The setting is fantastic. But one thing I would like to make an observation on is that I find that it is very, very centered around the industry only. Right? We said that there are three tripods, right? The government and the regulation, the industry, and the customer. But this convention seems to be only talking about itself, which is not bad. I think it helps to figure out what other people in the industry are thinking, so that as an industry, jewelers, bullion traders, refiners, banks are all understand what the other person is thinking. But that is not the entirety of the industry. There is the customer, there is regulation.
Yeah.
So from a systemic perspective, I think these are very useful, but I think they'll be even more useful if we actually had representation from the other parts of the
government regulation.
Yeah, and from the government, it's not necessary that a joint secretary or an additional secretary comes every time. Let us call in the section officers, the directors, the under secretaries, because they also need to get a feel for how is the industry thinking, why are they behaving the way they are. So that would be one suggestion that I would have for conference organizers.
We will certainly take it forward to our next event.
Yeah.
It's a very, very good suggestion. Thank you, sir.